Very good afternoon to you, viewers. It doesn't matter where you are actually watching this video from. Good morning, good afternoon, good evening. My name is Podmino Keke, the founder of MEA Market Experience Academy. I have come with this episode of our forecast for the week using what DXY to forecast what the market is going to do for the week. So without further ado, let's just do what? Dive into our charts. I normally make use of TradingView for my analysis. So let me take you to my chart while we dissect the market and predict what the market will do for next week. So please follow me with my chart. Share my screen. Right. I believe you can see my screen. Okay. Okay. So this is what DXY, which is what US dollar index. US dollar index is an index that is used to what ascertain the strength or the weakness of dollar to other baskets of currencies in the forex market. So basically, for me, based on experience, I'm an experienced trader. Yes, I've been in this industry for like at least 10 years. So not just going out picking your US dollars, Euro USD, Great British Pounds USD, and all blah blah blah, a lot of PS, and just do analysis on them and dump into the market. I try to bring one or two, three confluences to filter what my setups. So I think one of the filters or confluences that I use is what DXY. And if you watch from my beginning of my episode 1 or 2, you will see that I told you about major currency pairs. I don't trade minor. I trade major currency pairs and maybe commodity like gold. So I try to take 1 or 2 pairs. I don't like trading everything in the market. One pair alone can give you so much money. And every pair you see in the market has a way that it moves to other pairs. So it is left for you to do what? Understand the psychology behind that particular pair you are trading. Don't have more than 10 pairs. Yes, fine. Maybe when you are advanced in the industry, you can trade more than 10 pairs. Yes. But as a newbie that is coming up, try to focus on 1 or 2 pairs. It really have impact to your results. It has a great impact to your result when you have 1 or 2 pairs. It will help you to master how that pair moves, know the sections in the market where that pair makes a lot of moves. You understand? So DXY is what the first go place or go-to place that I will go to do my analysis to what predict the strength or weakness of the dollar. Then from there, I will know what to do to other pairs like Euro USD, but majorly the major pairs, major currency pairs. I will know whether to buy or sell based on the strength or weakness of the dollar. So let's go now and do what? Dissect our analysis. So I normally do what we call the top-down analysis. We start from the weekly time frame to ascertain the market trend, whether the market is trending or what or not. So first of all, I zoom out my charts to see what the market has been doing. Okay, so I believe you can see it properly. So we're going to draw my rectangular shapes. I use this rectangular shape to do what? To draw my possible zones. The zones that are what very that are clear, that you can see with your eyes. They're not hidden. These are the zones you can see in the market. I see one here. Sorry. This is a possible zone. So the market made what? A multiple touch here. With a touch. And try to do what? To put adjustment. Touch, does a touch. So what we'll do is to concentrate on this because we're not really trading weekly. Let's concentrate on this, what is happening at the moment. So take our analysis from here. That zone. See. Not properly. So towards another level. Okay, let's step down to daily. Forgive me, I don't know what I fixed that's showing my front on my screen. I'll be over here. So this is the daily. We're going to do touch, touch. Oh, you. It is the zones that we use our rectangular shape to what represent the strong zone, the strong zone, multiple touch, strong zone, strong zone, strong zone, strong support zone or demand zone. That's why the market broke in and now it's in. This is what a strong signal for us. Market what is in that broke this strong this strong demand zone has been broken by this what market. So we don't know what will happen. I'm seeing what this area. I'm seeing this area. This is what a major area, and I can see rejection in this very area. So I will use my rectangular zone to this other flexible zone, which is in yellow symbol to denote it. Okay, let's do it properly. All right. So if you check, you will see that this market has actually been making what ever since this counter trend was broken. Where counter trend was broken. Ever since this counter trend was broken, market has been a kind of what ranging in this area. This is a kind of range. It's not, to me, it's not a downtrend. This is what a range. Market has been ranging. The AXY has been ranging. We check, we zoom out properly. Let's maybe take it to weekly charts. You see that the market has been making what? Higher high, higher low, higher high, higher low, higher high, higher low. So there's a tendency that the dollar actually wants to do what? Resume its upward movements. It wants to what? Resume its upward what? Movement. That's what I'm saying. But this is what a retracement. This is just what a retracement to continue the upward trend. To continue what? The upward trend, or to make a double top before going down. I don't know if you're getting me. So this very candle, weekly candle that bashed in this strong zone, which is what the demand zone. The demand zone was broken. That shows you that structure has been what broken. But we need to know if this market breaks this very yellow rectangular shape and a kind of this will be entering. If it breaks it and does something like this, then we know that here and the dollar what has what resume what is upward moves. Remember that what is the dollar has what continued what is the upward trend. That's what we should be looking out for. But basically, let's have it at the back of our mind that dollar is just still what's trying to what retrace from the upward move in the upward trend that it has embarked on since God know when. No, since when? No, since 2011. And it carved out a very good, perfect bottom after the crash of 2008. So it carved out a bottom in 2011. So it has been what making what a higher high, a higher low, a higher high. So let's see whether if it will resume what is uptrend. So for this week we are entering. Normally I use my trend line to actually serve as a guide for me. And trend line serve what as a guide. Yeah. So it's the ladies. So I said my trend line serve as what as a guide. Let's go to the daily so I can draw it properly. So this serve as a guide for me. So now as we are entering this week, you can see that what based on this strong support zone, the market kind of penetrated it. But that is not enough for us to say that okay, the DXY has actually resumed. It's about to start going up. Let's see what this week will bring first before we can decide that. But if we check it, how are we gonna know that okay, DXY is about to resume the uptrend if this counter trend we are seeing here is broken? Very trend is broken. If this very trend, counter trend is broken, then that means we will still dive down. Okay, still dive down here, or it will come to this level to form double bottom. It will come here. Probably we'll see something like this. Yeah, this will do like this. This. I think that's possible what we can see in the market. What the market can play. Either this week, next week, next month. This could be what the possible what moves before we could see something very huge move to the upside for the dollar. These are what my speculations. These are what my speculations. We could see something like this happen, play out maybe next 2 months, next 1 month, next 2-3 weeks. But for the possible move, we are actually anticipating it this very one. This very one. Market could come here, come down here, touch here, come down here, touch here, come down here. You understand? To form a major what? Double bottom that will help it to what? Break this counter trend. So, and I told you that when you see what a down move of the DXY, it means what? The strengthening of the euro, the strengthening of the dollar, the strengthening of the dollar, the strengthening of the euro, the strengthening of the dollar, the strengthening of the euro, the strengthening of the dollar, the strengthening of the euro. So like here now, the euro was one that was strengthened. Whenever the DXY is what? Bearish or weak. In other words, the euro USD will be strong. You'll be buying the euro USD. Whenever the index is what? Bullish, that means what? The dollar is strong. You should be selling what? Euro USD or Great British Pound USD. So based on what we are saying here, if the DXY is bearish, that means Euro USD is strong, US dollar is weak. If the DXY is strong, that means you should be selling Euro USD or Great British Pound USD. You should be selling them. So that is what it entails. Let's go to the 4 hours. Now we see this analysis properly. So we could still see what the market come down this week like this, then go here, and come down here, go here. Should be expecting something like this. A break of this counter trend, then a retest before we do what? Dive into do what? To buy Euro USD or maybe for a long time. Well, expect this move, expect this. So if you are actually trying to sell, buy Euro USD or wherever you want to buy in the market, and if you want to buy based on this analysis, you should be looking at to do what? For the strengthening of the Euro USD, Great British Pounds USD this week, a temporary strengthening of the Euro USD as the market opens. Yeah, the market could maybe still come up here to form double bottom before coming down. It all depends. Yes, for it to do what? Strengthen what? The US dollars again. I don't know if you understand what this analysis. So I told you that I normally carry out my analysis on DXY to understand the strength and what the weakness of the dollar, the possible strength and weakness projection of the dollar for the week before I will know what to trade. So as I'm saying it, I will allow the market to form all these structures so we know what to do. in the market. It doesn't matter the style of trader you are. With this, you will understand what the market is about to do. Yes, with this, you will understand what the market is about to do. So that's that. Let me clean up this. So if we take it furthermore, like see something like this. Yeah. Let's take it in 1 hour. This market has broken a structure. That means that the market will still come down here. Let's type in here. What was going on? So what you should be looking at for is to do what? To buy Euro USD, buy gold, buy British pounds USD. USD JPY, you should be what? Selling it, selling USD JPY, etc. etc. Based on this analysis, if you're a structure trader, trade structure, you can see that here structure has been broken. But there's a tendency that this market, when market opens, this market will what? Rally down to this point. So this is an advantage for you to do what? To buy Euro USD, buy British pounds USD, buy gold, sell USD JPY, sell USD CHF. These are the possible analysis for the week. So let's check other pairs like Euro USD. Let's see. Oh, you can see the market is actually playing out already. This is Great British Pounds USD. Based on structure we just saw, is it? It's a 1 hour chart. The 1 hour charts. Yeah. So based on what we saw on our Euro index, if the market moves up to form double bottom here, that means it will strengthen the US dollars. Strengthen the US dollars. Or if it does what? Dive down here, that means what? The Euro USD will strengthen, the British pounds will strengthen temporarily. Understand? It all depends on the kind of trader you are. Or if you're the type of trader that actually trade higher time frames, like you use the 4 hours for your entry, or daily, you consider daily for your entry. What I will tell you is to have patience and allow these standard trends to break, just like what happened here. Allow it to break. Let this counter trend be a guide for you. If it breaks and moves here, you know that we are about to come to this point. Or if you are the one that, if you're the type that trade, maybe a day trader or a scalper, yeah, you can take these little opportunities out here to make some good money in market, especially if you are the type that manages a prop firm account. A good opportunity to do to trade these little swings you're seeing. So as the market opens, we should expect something like this, or the market will make up a double top before coming down here. So go here to make a double top forward coming down. So you take that opportunities, trade in the market. So I believe this is self-explanatory. So just watch your dollar index closely. See what the market does. Let's watch what the market does. Markets will come here to lows, continue going up. But the British pounds. So definitely what the US dollar does now that we used to know the possible outcome for what our British pounds and Euro USD. Let's watch out. If the dollar is weak, that means what the British pounds will rally up to this particular resistance zone. But if the dollar is strong, then we should expect that there's going to be what a breakout to this other zone. So if we check this properly, see. Yeah. Market opens which is better than market rally to the upside if the dollar is weak, as we have analyzed from our DXY. If all things being equal, enter from here. Enter forwards be long. Going long. Buy what's and buy what British French USD and put our stop loss within this area. So that would be like 3.8 to 7 risk to reward ratio. I believe this is well understood. So that's my projection for this week. So let your eyes be what's blue on DXY to see what the possible move the DXY will do before you take what you will either buy or sell. Trade majorly the major currency. Just focus on the major currencies because this DXY will serve as what a confluence for you to filter noise in the market, to filter your analysis and give you what top-notch setups for you to trade. Don't try to be all over the place in the market. Take trading as a business. Be meticulous about your decisions. Be meticulous about your setups. Don't just enter. Don't revenge. And let risk management go what a top notch because that's the only thing that will keep you in the market for a long period of time. Don't trade because you feel like you want to trade or open the market, open a position. No, you will blow your account. So you trade wisely. Have one or two confluences that you follow. Have a trading plan. All right, I think we have actually come to the end of this segment. So I hope to see you next week. A splendid weekend. May God bless you. Thank you so much. Thank you so much for staying to the end of this market forecast. I pray that all your wishes for the market in this very week we're entering, may it come to fruition. God bless you.